Shifting focus to the mining sector now, gold mergers and acquisitions have reshaped market dynamics significantly. Rising gold prices driven by geopolitical uncertainty have driven industry consolidation. Today we look into whether the time is ripe for gold miners to pursue acquisitions, and joining us for greater insight is Mining Director at Modern Corporate Solutions, Peter Major. Thank you so much for your time, Peter. It is a very, very good time to be a gold miner. They are flush with cash from the elevated gold prices we've been seeing. Are all the fundamentals of the economic and gold mining landscape supportive of acquisition splurging?
I don't think they're supportive at all. They are definitely supportive for the seller. I don't think the seller's ever going to get a better opportunity.
Yeah.
And if you just look at the prices we're seeing offered for some of these deals. We can start with the Goldfields' latest proposal.
Yeah.
No matter how you look at it, they are banking on $4,000 an ounce gold. Now, we thought they paid too much at their last acquisition when gold was around 2,200. And we said, oh, geez, it's going to need 3,000 to justify it. Well, it's at 3,000, but I think that's as much luck. You know, you can't have skill at predicting where the gold price or any metal price is going to go. These are crazy valuations, and it shows the absurdity or the extreme lengths companies will go to get more gold production before they just build a new gold mine. And I know it takes much longer and more money to think, but I got to believe my grandmother could build a gold mine and have a decent margin at these prices compared to buying an existing producer.
Well, it's actually quite interesting because these miners are really not looking to build new gold mines, but they're looking to buy. And because now, I mean, you said that this is good for the seller and not necessarily the buyer, because now you have the seller knowing that there could also be a lot of competition coming from the buyers. Does this then not create a fertile ground for overpayment?
It even turbocharges the fertile ground for overpayment. Yeah, it's like throwing fertilizer on an already very luscious crop.
Yeah.
Yeah. No, you're exactly right. Exactly right. And, you know, some countries are taking heed of this. Canada is one of them. Canada is now saying, guys, bring us your mining projects. We're going to help you fast track it. Because we know it takes 8 to 10 years to get your permits and agreements. We're going to fast track it so it only takes 3 to 4. Now, the United States is talking about that, but Canada has already put forward some concrete proposals. And I would hope our government does something like that, that they say, guys, please don't waste your money on expensive overseas acquisitions. We want you to put the money into the ground, and we will make it easy. We might even put BE on the back burner if you guys will come and build a mine here. That's what governments need to do.
Yeah, it's actually quite interesting because my next question was then going to be what should, because we've seen a ripe activity, these investments going into Canada, going into Australia, but no mention of South Africa. So then what does the government need to do to make, their jurisdictions attractive to people who actually maybe would like to build a mine or to invest and buy a mine in South Africa?
Look, for starters, they could go and rescind all of the negative policy and legislation they have passed the last 20 years. That's for starters. The problem is, if you dropped a nuclear bomb, it's a lot harder to clean the place up because it's still radioactive. And unfortunately, we've kind of dropped a bomb. We've put up all these policies and legislation. All of them are negative for mining in this country. But to cap it off, we've destroyed Eskom. We've pretty much destroyed Transnet, our water system. A lot of the infrastructure. We've riled up communities. We've invented construction mafias. So I don't know any country on the planet that's done more to chase away mining and to make it harder to reverse.
I actually want to go back to Goldfields because there's a whole spider web that is going on there. They released a cautionary announcement, of course, saying that they want to acquire Gold Road resources. Of course, they really want to get full control of that Gruyere mine. And then Gold Road says, no, actually, we're rejecting your offer, but we actually want to buy you out of this joint venture shared mine that you want control of. How does that end? And could Goldfields be in a tight spot, a spot of trouble at this point?
Well, I think they could be in a nice, juicy place. I would try and negotiate and help that company to buy them out. Now, Goldfields said, hey, that offer you gave us is not appealing at all because it didn't have very much cash and it had other things that could go against them. But keep negotiating. Never walk away for good. Never slam the door. If you get up and walk away, at least leave the door open. Leave the phone on. And so I think that would be great if Goldfields could turn this thing around and say, okay, you know, a bit of a Texas option. You won't accept our offer, then make us an offer that we can accept. So they can still come out of this pretty good. But if they have to up that offer, even if this offer got accepted, I'd be selling Goldfields, let alone if they offer it higher.
Yeah. Well, do you think then we could see more of this consolidation, at least in the medium term? And maybe also, what do buyers then need to keep in mind?
We will see more of this because elevated prices, they seem to transpose senior management to these high elevations. And we know what happens when you go up high enough, you get hypoxia. It means there's not enough oxygen and your brain doesn't work correctly. It works like it's in a laughing gas atmosphere. And that's why they start paying crazy prices and do crazy deals. So I think Goldfields must strap on an oxygen tank. They must avoid getting hypoxia, keep their heads. Undoubtedly, we're going to see other deals like this.
Yeah.
But you want to be the guy getting the cash. You want to be the guy getting out of the asset. There's a lot of undeveloped assets out there, and they can be brought to account and negotiate with the government. Say, help us fast track this, and we'll spend more money faster in your country. We'll employ more people faster.
Yeah.
I would much rather do that. I'm a fundamentalist. I'm a miner. You know, that's how Anglo-American beat the All-Share Index for 90 years because they built mines. They didn't go out and buy overpriced mines from somebody else. All their money went in the ground. It did the country enormous good. It did shareholders enormous good.
Well, very, very interesting insights there. Thank you so much for your time. And yeah, just giving us an analysis of the gold mining landscape as they are currently looking out for deals and consolidation because they are very, very flush with money. That was Peter Major, Mining Director at Modern Corporate Solutions.